You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it,
the broadcast is now starting. All attendees are in listen-only mode.
83310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phone. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Tuesday, 24th day of March, 2020. Thanks so much for tuning in. Whoever you are, wherever you are, we're just glad to have you right here, right now. If you can't see the screen I have up, just go to our homepage at cfrn.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered in about 30 seconds, and that will give you one-click access to the show each and every day. On the days you're out of the office, away from the desktop, not to worry, point any internet-connected browser to cfrn.net/live, and there you'll find a live, real-time simulcast of the show as it unfolds. You'll also find us during the show streaming live on YouTube, Facebook, and Twitter. All right. Well, happy Tuesday. Turnaround Tuesday, as they call it. Let's open in prayer again today. Father, thank you for your blessings, for your mercy, for your grace, and we thank you for this light that we see at the end of the tunnel. This isn't over. It hasn't passed. They say it can get worse before it gets better, but Lord, we trust you. We've placed the situation in your hands. You are our healer. You are our great physician. You are our hope in glory. We thank you. We pray, Father, that you continue to give wisdom to our leaders who have to make very important decisions from the top, from the Oval Office, all the way down to the emergency room where doctors and nurses are making life-saving decisions, even as we pray this morning. Again, Father, it's in your hands. You have our faith. You have our trust. You gave us life, and you hold that life in your hands. And we have peace with that. In Jesus' name we pray. Amen. All right. Well, let's take a look at the chart. S&P 500, Emini Futures. If we come back to this low, this little double bottom low here that we've drawn fibs off of so many times, we take that up to the most recent swing high. We've overshot that 62% fib, and we're just kind of hanging out here. The next area for potential support, we've got this little area here, but I'm thinking this area now. Do the laws of support and resistance require that we have to come down and touch this area? Not at all. Not at all. When buyers see a buying opportunity, they have the freedom to step in, buy the market whenever they're ready. Now, this is a weekly chart, okay? So this is where we stand on the week. I'll go way out on the proverbial limb and say this. With 3 and, I don't know, a half trading days left, is it possible we could end up with a weekly candle that engulfs last week's candle? And when you break it down like this on a weekly chart, green candle this week, last week, so we're talking about sits the all-time historic high. We've traded our way through 1, 2, 3, 4 weeks. This would make the 5th week. Seems longer than that, doesn't it? But this is what it is. And the reason I point this out, and again, not forecasting, not predicting that we're going to have a bullish engulfing candle, because what we've seen of late is these early morning rallies often get wiped out and turned into a red day. But in keeping a good thought, if this green candle we're printing right now could extend itself up to engulf the previous week, that is one of the most bullish candlestick signals that you'll come across. This is the weekly. Now, I'm going to switch this off to a daily. And keep this mental picture in mind here. I'll make all that disappear. I'll switch this to a daily. Most of you probably know where I'm headed with this. I'm headed back to December 26th of 2018. Okay, now let me open it up so you can see it. All right. Right here, this is December of 2018. Officially, the worst December since 1932. The day after Christmas, December 26th, well, we were looking at a weekly chart. This is now a daily chart. But you'll see the parallel. When we opened for trading on December 26th, we went lower. In other words, this daily candle, it was red in the early going. It reversed itself, and we ended up with this incredibly bullish, engulfing candle. Notice how this candle, it's lower than the previous daily candle, and it finishes higher than the previous daily candle. Now, on a daily chart, it's one of the most powerful reversal signals that you can get. A bullish or a bearish engulfing candle on a daily. When you see that on a weekly chart, well, it becomes a much more powerful signal. Remember, any candlestick signal that you understand, that you can interpret when reading a chart, the larger the time frame, the more powerful that signal becomes. This bullish engulfing candle led to what is arguably the most bullish advance over the course of 2019 that the markets have ever seen. So we don't want to count our chickens before the eggs hatch, as they say. But, well, you can see it right here. This is the weekly, right? We've got 3.5 days. Now the high of last week's weekly candle was 2640.50. So even a close this week at 2641, technically, that would give us what we saw on the daily chart back in December of 2018. So, a positive note to start the show. Let me give you the numbers from around the world, and Michael will pop in and give us a recap of everything that happened this morning in the live training room. Okay. Now these are the cash markets, or the indices as they're called. The Dow is currently up 1,649 points. It's a gain of almost 9%. NASDAQ up 466, gain of almost 7%. S&P 500 up 175 points. That's a gain of almost 8%. And the Russell 2000, the man in the street, up 77 points. That's a gain of almost 8%. In the commodity basket, crude oil up 36 cents, trading 23.72 last. That's a gain of 1.5%. Gold up $87.30, trading 1654.90 last. It's a gain of 5.5%. In the Asian markets, at the close, Nikkei posting a gain of over 1,200 points, gain of over 7%. The Shanghai posted a gain of 64 2 points. For the Shanghai, that's a gain of over 2%. And the Hang Seng posted a gain of 967 points, 4.5%. In the European markets, at the close, FTSE up 331 points, the DAX up 811, the CAC up 272. That puts the FTSE up on the session 6.5%, the DAX 9.25%, and the CAC 7%. I'm happy to say it's a green day in Asia, green day in the UK, and a really big green Radio Tuesday here in the US of A. Let's jump over to Michael if he's ready and get a recap of what happened this morning in the live training room. Mike says in the audience, idea, I wish you could put it on the monthly chart from the 2009 swing low to now. It's at a 38% retracement, but the 50% has a good look as well. Yeah, sure, Mike. When I come back, I'll be happy to put that up, or Michael might even want to put it up for you.
Yeah, I can. Hang on. I can do it. It's going to have a whole bunch of drawing objects on it, though.
That's all right. I can do it when I come back.
Okay. All right. You should be looking at my screen.
We are locked and loaded on your screen.
Okay.
So, any big news before you head into the recap?
Well, the biggest news, this morning I was trying to do more training than trading. I mean, I was still up, pretty good.
Right.
But, who was it? Cuomo started speaking today at some point.
Okay.
And that made gold just go crazy. And so it was an interesting morning. I'm just going to go over the trades that I actually did.
Okay.
Wow. I just realized during the whole break I was long on gold. And no, I'm sorry, crude, not gold, crude.
Well, I've got something interesting to talk about when I come back as far as crude goes.
Okay.
I've already showed you guys that from January 15th to the day last week when I originally posted the chart, crude had dropped $39,000 per contract traded. $39,000 per contract traded. Now, there's an old saying, what goes up must come down. Well, when it comes to the financial markets, I'm not talking about individual stocks, because they can go to zero, and sometimes they do. But when we're talking the indices and even commodities, what goes down usually comes up. So I published some numbers last night for the partners and passport holders and charted it out in the discussion group channel, but I'll share with the audience today. So I'll be ready when you're done.
Okay. All right. I'll get started, and I'll keep an eye out for John too. Okay, here we go. Good afternoon, everyone. Today is Tuesday, the 24th day of March 2020. If you have not taken a free trial with us and you want to take a free trial with us, go to the homepage at CFRN.net. You can see right over here it says free 5-day trial. You can click there, or click down to here, or click here. Any one of those is going to bring you to this page, eminitrainingschool.com. You can go directly to eminitrainingschool.com if you want to. But on this page, all we ask for is your name, your email, your phone number. You can tell us the biggest trading challenge, so we can tailor one-on-one training specifically for you. Hit the send button, and once you do that, you'll be sent a confirmation link. You must click on the confirmation link. Okay, once you do that, you'll be sent all the information you need to spend 5 luxurious days in our live training room. Okay, so here we go. If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. As I said, today's the 24th day of March 2020. Today we lost 8 ticks in crude, made 14 ticks Made 14 ticks in gold and 24 ticks on the ES. Put us up 360 this morning. Today, it took 4 minutes and 1 trade to get to $100 a contract, and we took a total of 6 trades. So on the month now, we're at $11,271. That's over 17 days, averaging $663 per day. On the year, we're at $18,223. That's over 53 days, averaging $343 per day. Okay. Okay. Let's get into it. On the gold, I'm not going to go over every trade setup, okay? Because there were just a ton, and you know, it would take all morning to do it. So I'll go back to the beginning here, load up some more data. And I'll show you the trade setups that we did do. We only did 2 of them because I was trying to do more training than trading today. You know, we've been killing it on the month. But let's scroll through. This was our first trade right here on gold. We picked up 10 ticks, and that's where we got our goal for the day. So it was really only 3 minutes. Before that, let's see. There was a trade right here. So I could have done it in less than a minute if I'd been sitting at my desk at that time, but I was 2 minutes late. I did open the room up early. Then I had to go cook my breakfast. Sorry, it's true. Then there was no long opportunity there. And the one that we actually did take right there. Now on this leg down right here, see what I've been telling everybody is look at the slingshot first. Well, I mean, you got to have the cross, and the trend. But look at the slingshot. Now, when you look at the slingshot, look up at the price and see if it's reacting the way that it should be. You know, because right now things are moving around so fast. This green line right here is the fastest line on the chart. And when it pulls away from the cycle, which is the slowest line on the chart, then price should be showing that. And that's going to be the beginning of the trade setup. So when they move around really fast like they have been, and I'm telling you, it just wears me out. But trying to watch all these markets and talk about all the trade setups that are coming through. There. And cycle reset. And this is all before, you know, in the first 15 minutes. You know, you could have made $1,000 a contract in the first 15 minutes. Well, if you knew the trade setups and you actually executed the trade setups and you got filled everywhere. But I'm not saying that that's what I did, because I didn't. And you know, later on in the morning session, I started talking about the YBR trades. You know, if you have good separation down here, and you have right up here and you get a down close, bang. Right up here, get a down close, bang. Okay, blue with an up close, blue with an up close, red with a down close. Oops, nope, we didn't have the right separation down here, sorry. I mean, it worked out anyway, but we didn't have the right separation. This one we did. You know, that YBR trade is, it's really simple. But let me just get on to my next trade. The next trade that I did. It was a 4-tick trade. Wow. Now the problem with gold right now is the liquidity. See all these ones? You see how we have a spread? You have all these 1s and 2s. Somebody puts on a 10 contract trade, it's going to move the market. Okay, a couple more trades there. This is the one that we did do, was 4 ticks in profit. And there were just so many opportunities this morning. So many opportunities. Let's see. Over here, there was a long opportunity here, a long opportunity. Oh, we put on another trade. I did not know. I did not count that. Hang on. Let me fix this. It was so busy this morning that I'm trying to teach, and the markets are jumping all over the place. So I'm trying to teach the trade setups to the new people that we had in there this morning, and just show them and talk about when it's setting up. Like if I see something like, hang on, I'm just going to skip right to the end here. Okay. So right here, I don't see anything happening right now. Okay. But we'll go to another market, and like here on crude, if we didn't have dynamic support here, we'd have had a shorting opportunity right here. Now you got to look at the slingshot. Okay, you got to watch the slingshot. Now I have to go fix the spreadsheet. Hold on. Okay. See, like right here on gold, look for this to pull back, and then look at price and see if you got a trade set up. All right. On the euro, we didn't do anything today. Not because it didn't have anything, just because I was so busy with everything else. I was going to just go to one market today, but Bart wanted me to do all of them, so so I stuck with it. You can see there were a bunch of trades here on the euro. There. Just look down at the slingshot. Okay. There. When you look at the slingshot and you look at price, the slingshot's telling the tale ahead of time. It's giving you a heads up to let you know what's going on with the market. Okay. On crude, we only had one crude trade today that I did. There were a bunch of crude trades, but I only took one and I stopped out pretty much to the tick. And that was using the trade setups that we use in the room. Again, the YBR red, down close, bearish separation, and down it went. YBR blue, oops, nope. We have to have bullish separation. We really didn't have it there. There was another good example of it that I was showing today in the room. But anyway, that was our one trade that I did do today in crude oil. It was -8. I see John just showed up, so let me get to the ES and then finish my wrap up. Hold on. Here we go. On the ES today, we took 3 trades. There were a ton of them. They were all over the place. And ES was bouncing all over the place this morning. It was crazy. And I went and looked at the larger time frames on all the markets, as a matter of fact. And like the ES, where's that line that I drew? Was it on the ES? Or was it on? It might have been on crude. Anyway, let's get back to my little world where things move so fast. Still on the right day. Okay, so here we go. This is the ES. And there were a ton of trade opportunities in here. Again, just look at the slingshot and see what it's doing. If the green line's pulling away from the cycle, look at price, see if you got a trade set up. If you do, you got to put it on quick, and you got to handle your risk really well. You got to be really fast with your risk right now. Okay. Looking for the trades that we actually did. You can see that there were a bunch of trades in here. In here. If you know the trade setups. Yeah. Okay, there was one there, but I'm sure I was talking about something else or something. Okay, here we have a couple of trade setups on the ES. The first one was a break even. The second one was plus 16. And the third one was plus 8. Okay, that put us at plus 24 on a morning session on the ES. Yeah, there were just a ton of them. All right. So with that, I see John just popped in. So I am going to go back here to this and say, again, if you're going to read the spreadsheet, you could read all the CFTC risk disclosures down at the bottom. Today's the 24th day of March, 2020. We lost 8 ticks on crude. We made 24 ticks on gold and 24 ticks on the ES. Put us at plus 460. I fixed the gold. I forgot about that other 10 tick trade. It put us at plus 460 per contract per 2-hour window. And today, again, it took 4 minutes and 1 trade to get to the goal for the day. At that point, we're up $100 per contract, and we took a total of 7 trades. And it was really 2 minutes, because like I said, I was 2 minutes late. I did open the room up early, but so on the month now, we're at $11,371 per contract. All right, that's over 17 days, averaging $668 per contract per 2-hour window. On the year now, we're at $18,323. That's over 53 days, averaging $345 per contract per 2-hour day. Now, if you have not taken a free trial with us, you can go here directly to eminitrainingschool.com, or what most people do is go here to CFRN.net, click on 5-day free trial, and it's going to bring you directly to eminitrainingschool.com. On this page, all we ask for is your name, your email, your phone number, and you can tell us your biggest trading challenge, so we can tailor one-on-one training specifically for you. And we really do the one-on-one training. Okay, hit the send button, and you'll be sent a confirmation link. You must click the confirmation link. Okay. Okay, and with that, we can pass it back out to fabulous Phoenix, Arizona, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
I'm ready. And did you say John's here?
Yes, he is.
Okay. Recap of the recap.
Today it took 4 minutes and 1 trade to get to $100 per contract. Okay. You want me to open up his mic?
That's good bingo. Yeah, sure.
Okay. Here we go.
As we'll recap, after we talk to John, we'll recap the Concierge Trade Alerts, the Logic Alerts. There's real movers and shakers last night, so we'll go over those. John, you there? Yeah.
No, his mic's open.
Okay.
So.
Alright, I'll jingle his phone and let him know that we're ready whenever he is. There we go. Notified. All right. Let's bring a chart back up. Okay. So, this chart that I posted See if I might still have that chart. I do. Okay, I posted this chart last week. This is a daily chart of crude. We had a bullish cross back on October 21st of 2019, and we did not see a bearish cross until January the 15th. This is on the daily chart, crude. The bullish cross took place at 52.55. The bearish cross took place at $59. So $59 minus 52.55, that's $6.45 per barrel. That's a now each dollar move in crude oil, up or down, translates to $1,000 per contract traded. So from here at the bullish cross to the bearish cross, we saw a move of $6,450 per contract. We got the bearish cross January 15th, and from January 15th until I calculated it the other day, and I don't remember exactly which day I calculated it on. I guess we'll go ahead and mute that mic. Here, I'll take care of it.
Got it.
You got it? Okay, thanks. So, from the bearish cross here to somewhere in this general area, whatever day it was, I computed it last week, it was a $39 drop per barrel. We've gone from basically $60 a barrel, $59 a barrel. Currently we're trading down at, I guess now's as good a time as any to just update that number. So, see the bearish cross right here. Alexa, $59.10 minus $21.80.
$59.10 minus $21.80 equals $37.30.
Okay, so I must have been pinging off this very low right here. So I will make it 37. Just to be conservative. Okay. And I was using this number right here. All right. Okay, so, well, that's all fine and good. And for the record, I did not go short here and get out here. Just for the record, I did not do that. Now, on the way down, we had this nice little pullback to the BBC. Price always reverts to the mean. And in our case, the mean is the BBC. BBC stands for bull bear cross. When price crosses above it, we're bullish in that we anticipate higher prices. Once price gets below it, well, then we're bearish because we anticipate lower prices. Until when? Until price gets back above it. So we had a leg and a retracement to the BBC. Market gave us this nice little daily doji right there. And then we begin the drop. Okay. So as I said earlier, what goes up must come down in the natural world. And in the world of the markets, what goes down, unless it's an individual stock, almost always goes back up. So what might that look like? Well, it might look like this. Okay. In fact, let me grab the numbers because I gave the folks in the Telegram channel last night the exact numbers to work from. So let's take a peek. Okay. Scrolling up, scrolling up. Here we go. All right, when I first sent this out, I sent out a chart off my phone. I was just walking and talking and thinking. I got back to my desk and I redefined these areas. So the boxes, consider that a rough sketch. The actual numbers that I'm talking about is price going from $25.50 to $27.50. That's a $2 move, $2,000 per contract traded. And we have an area where we may find resistance. That would be right about this swing high right here. Because remember, this candle, this daily candle, it opened, it was green, looked like good things, but then midday it reversed, and we did finish off the lows of the day, but a green candle turned into a red candle. So as we approach that area, that could potentially be resistance. This next little area is 29.25 to 30.50. So that's $1.25. That's $1,200 per contract traded. All right. Hey, John, are you there? We're going to mute your mic.
I just did.
Okay, thanks. And then this last little area, 31.50 to 32.50. That's $1. $1,000 per contract traded. Then consider being flat, because at that point we should be running into the daily BBC. Now, when we get there, one of three things will happen. The most likely, consolidation. Second most likely, rejection. The third, the least likely, but it could happen, is we could slice through it as if it's not even there, just like a weekly trading zone. So I expect this, while the highest probability would be to, in fact, get another leg to the downside. If we don't immediately get that leg to the downside, then we could see some sort of choppy trading here. Eventually, at some point, and I don't know when that will be, we will get above the BBC. And when we pull back to that BBC, that's when we'll be looking to consider being long for the duration. Now, if upward momentum is strong as this happens, these three windows could all become one trade. In other words, you may not have to break it up into pieces. I mean, if price is just, ripping up the chart, there's no reason to get out of a perfectly good trade just because some guy typed this particular number into a Telegram channel. The most important information that you'll ever receive regarding the markets is the information that the markets themselves give you, not someone else's interpretation of what the market is saying, but your interpretation. And that's really the bottom line with what we try to do with everyone who becomes a CFRN partner, is we want you to be able to read the chart, to understand what the market is telling you, telling all of us, just like we do. We don't hold anything back. There's no secrets. There's none of that. We're very, very, very transparent. Okay? And everything that we do is based on logic. And by logic, I don't mean a brand name. I mean the kind of logic that Spock spoke of. It's something's either logical or illogical. So this move up, we may go lower. We may get to add an additional window here, down here, based on what price does. The longer that we spend, and now we've been kind of going sideways for 1, 2, 3, 4. This will be the 5th session. That in and of itself is an indication that the market may be finding a bottom here. if we look at the last time we went sideways, this was after a huge gap here. Okay, we went sideways 1, 2, 3, 4, 5 days, and then continued the decline. Okay, but we're talking $20 a barrel oil here. Okay, so could we go back to test these lows? Absolutely. If so, will that create another window here? It will, but it's going to drag the BBC a little bit lower, so this window could get negated in the process. Now, the really important thing is, just as in this example, this was the big slice of the pie right here. On the way back up, where this bearish cross took place, I've got it pegged at 52 bucks. So we get back to, say 30, we'll call it 37 bucks. 37 to 52, what is that? 25 points? 37.
No, it's like 15 points, I think. Yeah.
15? Yeah, okay. So, then that's a $15,000 per contract move in this area here. Okay. Now, are there areas where the market could catch a hiccup? Sure. That swing high. This area here will probably be important. So I don't know that this will be a seamless move to the upside. But this move to the downside was not necessarily seamless. Also, markets have the ability to fall much quicker than they rally. It may have something to do with gravity. But I'm just telling you that if you missed this, and most people probably did. I mean, I'm sure we all got bits and pieces of it on the way down, but I'm sure very few got it in its entirety. And if you did, congratulations, that bell's for you. So this is what's coming. I can't say exactly when, and I can't map out exactly how it's going to move, but whether it's a week from now or a month from now, we'll be looking back at this chart, and we will see exactly how these little boxes got dealt with, and then also this bigger area right here. Once price gets above this swing high at, call it 37 bucks, I think this move up to $40, that could probably be swift. That could happen in a session. Now I'm doing all this bullish talk on a day when on the daily we're actually printing, at the moment, a red candle, but it's a very small candle. Okay, so this looks like and this low. See, this low was 2052. This low 2080. So it's about a 30-cent difference. So that qualifies as a low and then a higher low. So that's my story on crude, and I'm sticking to it. All right. Now let us go back here and go back here. If you want to grab a screenshot of the Concierge Trade Alerts, feel free to do so. Is that you, John?
I'm trying to be in.
Good Lord. Oh my goodness. Hey, John.
Hi there, how you doing? Sorry about that.
There he is.
You okay?
Yeah.
Oh, okay.
Yeah.
Okay. All right.
What was I going to tell you?
I don't know.
Yeah, the key thing that happened yesterday afternoon remember we sort of said down in the morning, up in the afternoon, and when the what you call it, what was I going to say? When the news came out that they wouldn't get the deal done till Friday, and the market just literally didn't stall. It may have stalled a bit, and then it reversed and went up. When we started going up on bad news, that was very, very significant. And the Nasdaq eventually closed positive, as you know, just barely, but it was enough to make the difference. And it was a kind of a, what's the word, trap, if you like, a bear trap.
Right.
Because previous day when the Nasdaq sold off, that was kind of like, it was really only Apple and a few other Nasdaq stocks that made lows, because as I explained yesterday, a lot of the Nasdaq stocks closed almost up for the week, right? So right now I'd be a little bit cautious, frankly. Seeing as they're coming off a little bit here this afternoon, up in the morning, down in the afternoon is something to be careful of. However, if this deal comes through today, and it looks like it might, it's probably such a good deal that it just might push the Dow up 2,000 or 3,000 points today. We might have I wouldn't rule up a 3,000 point up day. I mean, I think there's one coming at some point in the future. Whether it could it happen today? Yeah, it could. But
this is a weekly. This is a weekly chart, John, of the S&P, and we were just talking about. Think back to December 26th of 2018, when we had that bullish engulfing candle on the daily chart after the worst December since 1932. We still have 3.5 trading days left. This is a weekly chart of the S&P. If this thing could rally up, and if it could close, if we could close the week above 2640 and a half, I mean, just 2641, that would give us a bullish engulfing weekly candle. And that's about as strong as a turnaround signal as you can get.
Oh, absolutely. And not only that, it's kind of like what I call a double weekly reversal. But what you got to be careful of is if we only get up to about 2,600, where it's down and up, and we run, you have to be very careful of those kinds of things, because they can they can end badly. And obviously the situation with 400,000 cases now, and it's really just jumping up. And look, you got more and more countries going exponential. It's pretty frightening, actually. And
see, that's the thing. I mean, because we're doing more tests and have more data to work with, I don't know that means that the situation is necessarily worse. We're just more aware. We have a greater awareness of the problem.
Exactly. And the thing is, people are getting used to it. The shock factor has it's still there, but it's we're coming to grips with it, and they just shut down India, the largest shutdown in world history, 1.3 billion people. Everybody's getting the memo. And they're getting pretty aggressive over in the UK. So it really, and I think, look, Trump got criticized yesterday for saying, we might relax things in a week or two, but I think he sort of said that just to kind of get the probably help the market up a little bit, give people a sense that we might be back to normal sooner than we think. But
shame on him for all his doggone optimism. Shame on him. That's
say that. Say again, sorry.
I said shame on the president for all of his optimism.
Yeah.
It's just the craziest thing in the world. All the doomsayers, the doom and gloomers. I mean, why can't a person have hope? And the commander in chief, the leader of a nation. I mean, isn't that? I agree that he should not be creating false hope, but I don't think he has.
Not at all. Not at all. And listen, he's he's as good an analyst as any of these medical guys. And the fact of the matter is, this chloroquine thing, it may not be 100% effective for everybody, but if it's 70% effective for better. It's better than nothing. You know, it's better than dying.
Did you hear about the guy here in Arizona? Him and his wife, they're in their 60s. After the president made his speech last week where he first really talked about the hydrochloroquine.
Yeah.
This couple, they went to a local pet store, not a pharmacy, pet store, and bought chloroquine phosphate, which you use to clean your fish tank with.
Mm-hmm.
They went home and took this stuff, and they died from it, and now that's the president's fault.
Oh, I know, it's a disgrace. Talk about fake news.
I mean,
that's the fakest news you ever heard.
Well, I mean, it really did happen, but it's not the president's fault. He never told any, you know. And I feel terrible for the people. I think the wife's still alive. The husband died. I mean, and I'm sure there had to be all kinds of warnings on that container, not for human consumption, whatever the case. So.
Yeah, very unfortunate.
Very unfortunate.
Yeah. So, by the way, the gold, you know, I did say yesterday, biggest buy signal in history was generated on Friday, and certainly not disappointed in the performance so far. You know, it's probably going to trade in this range here, you know, prior to breaking above 1700, but it's certainly gotten everybody's attention today. And oh, how about that? Platinum just went through 700 after being down at about 590 something yesterday. So platinum, and by the way, I think I was talking about this last night before this even happened. And I actually was explaining, and I might as well do it for the benefit of the audience right now, you know, just a very brief history lesson. We started in 1935 at $35, right? And the Dow and gold were the same price, okay? And then the Dow started going up, and gold went up eventually. And from the mid 60s, it was 35, went up sevenfold to 200 around about 1974. Had a 2-year correction, got cut in half, made a bottom at 104.60. 1976, and then we had an 8-fold increase in 4 years to 875, and the Dow and gold intersected again, and the next phase of gold was 2001, and here's the clincher. In 1998, the palladium bottomed, and it went up, it tripled to about 2003 or 4, and then it topped out. But it tripled, and then platinum went up, and it went up 5-fold or something, or maybe more, to an all-time high of 2250. It was the most expensive precious metals. It topped out in 2008, so it had a very rapid upcycle. The silver, in just the same way as it's behaving right now, was the last to get going. It didn't bottom until 2004, and it went up 11.5-fold to 2011. I believe the same sequence is kind of going on right now, where palladium has gone from 500 in 2016 to 2,800, 27, whatever it was, 2,750, almost 5.5-fold, something like that. And so what palladium is telling us, based on its previous history, is there is probably a monumental up move coming in the metals, in the gold and silver, possibly the platinum, and more than likely the silver. And I've had targets for a while. I think the silver eventually gets to about $135 an ounce, and I think the gold is destined to go to about 8,750. But before we get too ambitious, I think everybody will agree that the deficit will probably be 30 trillion by the end of the year or sometime next year, and a 30 trillion deficit is probably guarantees about a $3,000 gold price. So it's sort of big, you know, the writing's on the wall. and that's obviously going to be very good for miners. That's what's going on right now. People are starting to get the memo, and if we start going 1800, 1900, I think almost every miner in the world is going to go higher, because when the hedge funds start, when you get in a rally like this, they're kind of a buying stampede. These hedge funds, they go through the list of miners and they'll buy anything that has prospects, and they almost buy anything with gold in the name. So there's probably going to be a very, very dramatic up move in these juniors. If you only have to go back to look, Poseidon went from 50 cents to $270 in Australia in 1980, sorry, going into 1980. So you do the math on that. There were many, many, many hundred-fold gainers. There were in the 30s, there were in the 70s, and more than likely there will be in the 2020s. And gold stocks are probably. I mean, this looks like it's going to be the biggest bull market ever, the way things are shaping up, because what we didn't have a week ago or 2 weeks ago when the gold got knocked down was we didn't have the money. We got the money now, so the money is the fuel for the gold, and there will be inflation, and so the inflation will come, and it'll probably come quite forcefully down the road, because if the dollar adheres to its cycle and turns down into 2023 or 4. If the dollar gets cut in half, which is what's happened in previous down cycles, we're going to have 20% inflation at least. And that justifies an 8,750 gold price based on the fact that in 1979, 80, the inflation got to 12 to 14%. And look what happened. You got an eightfold up move in gold. And most of it happened in the last year. So, this is almost inevitable now based on what's going on, because they're going to have to keep pumping money into this economy for as far as the eye can see. The Fed is on an unlimited QE right now. They've said it. That's why the market went up so dramatically since yesterday. And we said it a week ago, 2 weeks ago, don't fight the Fed. That's rule number one. When the Fed start really, and even Trump thanks Jerome Powell this morning or yesterday to some job well done. So, he's up to the task, and probably Kashkari might be the next Fed chief after this guy. And if that's the case, he's probably going to introduce this 5 trillion line of credit, and we might need it. Maybe that's going to be the elixir that gets the roaring 20s going, that we've been talking about. But it's going to take a while for the roaring 20s to get going, but given what's going on right now. But, in terms of resetting the whole thing, I mean, look, we've gone from 95% bullish on the fear greed indicator to 1, down to 1, all-time record low. Markets rallied. We might see those low numbers one more time, perhaps 1 or 2 more times, but eventually we will go back up to the 90s or 95, and who knows, we might go to all-time highs. Take a look at DOCU, Tokyo. I mean, there's no bear market there in that stock.
Well, and this is, for those who don't know, this is a company that allows you to sign legally binding documents across the internet without having to meet with someone face to face and share the same ink pen and all of that. So,
and Zoom, went up through the roof yesterday, came down today because it sort of probably got a bit overdone. The ZM, sorry.
Go.
It's kind of a sell on the open, but it looks like it's probably going to go even higher.
It's bounced back to a degree.
Yeah. By the way, Microsoft I think is doing very well today. Not too bad. It's come off a bit because there's a bit of a sell-off going on right now. But
Look at the difference in these candles versus these.
Mhm.
I mean, that's it. That's just. Well, I think it speaks for itself.
Yeah. By the way, that's not a very bullish chart, to tell you the truth. So keep that in mind.
No, it really isn't. I mean, there's a pretty well-defined trend line.
Yeah.
Across here. If we can break that, then there's hope.
Yeah. So, look, remember 2018 we had a turnaround Tuesday, kind of like today. And we were up on Wednesday and Thursday. We rolled over midday Thursday, and we had another devastating Friday. And then it was, right in the middle of the show. It was about this time of the day. It was about 1:30. It really, I was starting to wonder when the market would turn. And it suddenly turned, and we came roaring back on Friday afternoon, the first week of February of 2018, if you remember. So I kind of think that's a potential recipe for this week. Hang on a sec.
Here's the S&P cash index. Now, remember, this you cannot trade. This is what futures are built off of, the S&P, E-mini, options, all the different derivatives revolve around this. However, this doesn't print at night. The reason you see these gaps that you don't see in the futures market is because futures are closed for an hour a day, from 5 p.m. to 6 p.m. Eastern. This only updates when stocks are trading, because this is the index of the 500 large cap stocks that make up the S&P 500 index. We had a gap higher open today. The close yesterday was 22.37, and we opened today at 23.44. Okay. So if we can take out these highs right here, and there's a lot of work to be done, to recover all that has been lost. But as we've said all along, it's not the end of the world. And based upon what we've seen in China, in Italy, it will get worse before it gets better. But I just feel like it's gonna get better before it gets worse. We ventured out yesterday. We went to Walmart. My wife wore the mask. I didn't wear the mask. We only had one mask, so I gave it to her. You need to get that? All right. So we ventured out yesterday. We had one mask, so I gave it to my wife. I probably wouldn't have worn it anyway, but walking through Walmart and seeing no one looked fearful. No one looked anxious. People looked normal. I would say for a Monday afternoon, the number of people in the store was about average, maybe a little light. But it was such a surreal setting. It felt to me almost like I was an actor on a movie set. Or maybe another way of describing it was, it felt like a dress rehearsal. The fear factor just wasn't there. I mean, to look at the meat section of Walmart and to see it just completely wiped out. I mean, I couldn't even get a banquet pot pie. I had to settle for a banquet turkey TV dinner. But from burgers to steaks to sandwich meats, it was just pretty much wiped out. And a lot of the shelves were wiped out that you wouldn't even think there would be. My wife had wanted to buy some silver polish. It's all gone. I don't know. I don't know why there would be a run. Now, it may be that the trucks that Walmart has coming in to these local stores, perhaps they're reserving space for the really necessary items. So, not that there's a run on silver polish, but on the truck, rather than bring in cases of silver polish, maybe they should try to pack in a little more meat, a little more milk, some more eggs and some cheese, that kind of thing. And someone interviewed here in Phoenix that works in the big Safeway distribution center that covers the whole Phoenix area. His post was, we have tons of stuff. The warehouse is full. If people would just stop the panic buying, everything would go back to normal. He said, because as soon as we fill up a store, everybody rushes in and buys everything, and we're back to. He says, if people would just calm down, there'd be plenty of everything to go around for everybody. So we didn't buy a lot because there wasn't a whole lot to buy. But again, the feeling that I got, and this is just a personal experience, was it felt like a dress rehearsal. Almost as if we were going through this in preparation for, what someday may come. The big one. Those of you that remember Sanford and Son, at least once per episode, he would grab his chest and go, this is it. This is the big one. Well, I don't think this is the big one. So.
Yeah, by the way, Dwayne, the VIXs, had a tremendous correction off that $1,000 sell that we had on the TVIX, right?
Was it TVIX?
Back to, 245 this morning, and it's. I mean, listen,
wow! Look at that.
Any day you buy a stock at 245 and it goes to 320 in one day, that's a pretty good trade. That's about as good as Tilray. Remember?
I remember.
The last surge in Tilray. So. That shows you how dramatically this TVIX. I don't know whether we're going to go back to 1,000 on the TVIX, but I think given what happened this morning, there may be some further upside, still. And I was just saying to another guy a minute ago, this thing is accelerating so fast. There's 150 countries, or maybe even 200 countries around the world now have this thing. They're all starting out where the US was a month ago, okay? And so every country is going exponential. So the multiplier effect on that, remember, 7 billion people in the world, the multiplier is, I mean, honestly, we could have 10 million infections in 6 weeks. That's probably the worst case scenario. I mean, remember, the swine flu had 60 million infections. And the swine flu is not...
Say that again now.
The swine flu, which my sister caught, and
get your business insured in 10
had 60 million infections.
60 million.
Swine flu, yeah. Wow. And so
and no one was particularly concerned or worried about that, were they?
Well, because it is much more like a regular influenza. It wasn't that deadly thing like this thing, and it wasn't. Well, I guess it was contagious because you had 60 million infections. So was really something. But don't underestimate. I mean, I think I told you, one of the top doctors in the U.S. He's worth about $4 billion. He was a co-founder of Amgen. He's founded 15 companies, and he said 6 or 8 weeks ago, he said 60 to 80 million is his estimate for the U.S. Mm-hmm. So it's
Newsom says half of California is going to get it. I mean, his
numbers. Probably been listening to the same people, and given the lockdown and everything, it may nip it in the bud. You never know. So,
look at this. Look at this comment on the screen. Now, I feel so sorry for this lady. Her husband has passed, and my heart truly goes out to her. But she said, Trump kept saying it was basically pretty much a cure. The woman whose husband died told NBC. She said her advice for people would be, don't take anything. Don't believe anything. Don't believe anything that the president says and his people. Okay, well, I'm sorry, but the president never once told people to go out and buy chloroquine phosphate, which is commonly used for the chemical which is available in tablet form, is an anti-malarial, is also used as a cleaning chemical, but it's two different things. Hydrochloroquine, and I mean, who would go to a pet store to buy medication for something so serious? I mean,
Listen, she's
it's
an anti-Trumper.
An additive commonly used at aquariums to clean fish tanks.
Yeah, she's an anti-Trumper, and
it's just yeah, you know, and she lost her husband, and that's very saddening.
Yeah. I mean, look, seriously, remember, people are scared.
Yeah, they are.
And,
sure.
And they may have been scared into doing that, you know, so you can't, you know.
Yeah, and it doesn't say whether or not they had been diagnosed. It was unclear whether the couple had received confirmed diagnosis before investing the drug. So you're right. It could have been done out of fear, which means we got to keep a cool head, you know, at times like this.
Mm-hmm. So one thing I'm happy to report today is look, one of the things, it's been very hard to trade in the last week or two because the delivery systems, the data, and all, many stocks were untradeable yesterday because they were not, the data wasn't coming through.
Right.
Yeah, exactly. This is about the first day where things seem to be working like they should, you know. And I guess there have been a lot of issues with these people that they've had to work through to make sure the system can
I think
stand.
this is a turnaround Tuesday on more than one level. You know, not just with the markets. I just somehow feel, and maybe I'm being too hopeful like the president, but I just feel like we're somehow turning a corner with this whole pandemic. And I pray that I'm right. So. Well,
I think you are, but because to me, the most encouraging thing, I'm not sure if I sent my coronavirus. I've compiled what might be the most complete coverage of this thing. So, we've been on this for a long time, long before people woke up to it. And I've been adding every conceivable positive to deal with this into something that's about 20 or 30 pages long. I don't mind sending it out to some people if they want to avail of it, but they have to send their phone number and
Yeah, I've got the email. I've got the email right here.
Right, and also I'm not a doctor. I'm not giving them medical advice or anything like that. I'm just basically collating what I've picked up everywhere.
Mm-hmm.
And I can tell you that potentially the most encouraging development is the fact that the Chinese, who have borne the brunt of this, have selected, publicly announced, that their treatment for the entire population going forward is this Japanese anti-flu. So it's potentially an even simpler treatment than the corona, because presumably you only have to take one pill.
Japanese flu drug, clearly effective in treating coronavirus, is China.
Right.
Now, what is this flu drug?
It's got a name like Rapivir or something.
Oh, okay. Favipiravir.
That's the one. Yeah. And listen, they're out. I mean, they're out in the forefront saying that. I mean, that's a pretty big deal.
Yeah.
You know? So,
and if you don't have it yet, they recommend vitamin D. Get out in the sunshine and add some vitamin D to your diet.
Yeah, for sure. No, I've been taking the maximum vitamin D ever since this thing started, and vitamin C, D. They did an IV with 2,400 units of vitamin C, and it actually knocked this thing out. So it's they've tried everything. The Chinese, they've tried everything.
Mm-hmm.
So I think that's really, really encouraging, because I mean, look, if you saw the thing on CNBC on the Fox the other night, unfortunately, I missed taping the show. They probably have it on again, but they had a kind of a flu scare in the mid 70s, and I think I remember it actually, but they inoculated about 40 million people. So, getting this out to the entire population, I mean, listen, they've got 2 billion people. So how can what's the easiest way of getting those people protected against this? Looks like it's this Japanese thing. And, they're not that struck on the Japanese, as you know. The Chinese, a lot of tension going back over the last century with the Japanese. So the fact that they're willing to promote, select and deploy a Japanese treatment for this they don't even have themselves is remarkable,
Conspiracy theorists, of course, are saying that this whole thing's a ploy so that they can vaccinate the entire, world population to get whatever it is into them that they, really want. People have way too much time on their hand these days.
Yeah, there's a lot deep state theories. I hate to say it, but the deep staters going back to the Kennedy years and all that conspiracy to try and oust Trump. They basically got this virus out of a lab in Canada, deployed it to Wuhan to give them the cover, dropped it into China, and dropped it into Iran. And unfortunately, it looks like somehow found its way to Italy. Mm-hmm. So Italy became a kind of a collateral damage but ultimately is a way of getting, crashing the economy in the U.S. so Trump won't be elected. But it may end up if we can get through this before the election, it might enable a bigger landslide than you think for Trump. So that's kind of.
Did you see the?
I mean, can you imagine that people actually concoct an idea like this? I mean, it's almost as bad as, taking a plane into the Twin Towers. It's just, just a dastardly plot that some demented group of people came up with,
What's your thought on the J-Nug here, John?
Well, the J-Nug's in a world of hurt because of the, this knockdown that it got. But I'm actually kind of bullish on the J-Nug, to tell you the truth. And
it has, indications here that it's trying to turn.
Yeah, but it might actually go to a new low first and then turn. I think it's got considerable upside ahead of it. As I think I said yesterday, back in 2016, it was about March, either late February or March, the J-Nug was in the dumps. It was down at 180. They split it 10 times, which they're going to do on this one, and it went to 18. So it went from 1.8 to 18. Mm-hmm. Actually, the low was about 17.75, something like that. 175, sorry, something like that. Okay. So by the time they split it, I remember seeing it at $18, and then it suddenly got in the 20s. And if you didn't buy it, you couldn't catch it because it went to 288. So it went from 18 to 288, up 16 times, and the nuggets went up 10 times. And that whole from February through August was the biggest buying stampede in stocks in 30 years. And I personally interpret
that brings up another issue in of itself. People who maybe own this J-Nug, for instance, but they don't follow markets in the way that we do. They go to sleep one night and their holdings worth $1.70. They wake up the next day and it's 17. Somehow in their mind they think they've hit the lottery, and so people go rushing out to buy more or take whatever action. Most people don't understand stock splits and reverse splits and all this kind of stuff.
Well, the triples are very dangerous, and this is a triple. They're going to reduce it down to a double, so they're already cheating the new investors who are going to get into this, because it's going to take a lot longer for the J-Nug to go up as a double rather than a triple, so you have to keep that in mind. And I think it's a total rip-off, to tell you the truth. I'd make it a quadruple, to give the people a chance to make their money back. But they used to give you leverage on these things on CFDs and stuff, and they don't do that anymore. It's total. I mean, listen, if I was able to go into that TVIX on a levered basis, I'd have had a lot more than 1,000 shares of it. I'll tell you that. Because it was I wouldn't say it was a no-brainer trade, but we were going on about it long before it started, right? And we pointed out double bottom. We had some upside projections, which were considerable, but we on the UVXY, we sort of said like 30 or 40, and went to 130. So, we certainly were on the right track. Now the other thing is the opposite of that is the SPXY, and if you go back far enough to 2018, I think it is, 2018, you'll see that that was one of these JNUG deals, right? It got up to 130. We used to trade it on this show. It got up to 130, 135, and the greatest trade from 2009, that SPXY. Oh no, it was called it was called something else. It's called the UVX or something like that, it was $5, March the 6th, 2009, and it went up to about 150. So it was obviously a fantastic investment over the 9 years or 7, or whatever it was, 7 years at that point, right? Or 9 years, whatever. Anyway, that got delisted, so that's gone, which I think is the biggest tragedy of all, because you probably could have rebought it at 5 a few days ago, and it'd probably be like, if it wasn't messed up, it might have gone up to 50. Imagine buying something from 5 to 50, and since yesterday. So kind of like the TVIX has gone up today. So, and this SVXY, if you go back and look at the history of it, you'll see that it crashed. It crashed down from, I think it was about 130. And it's really not the same thing that it was. Again, look, it's gone from 20. I think it went from the low 20s to 32 today, and it's at 31.70 at the moment. So it's had it's basically been a 50%er over the last few days. But it bottomed last week. You had to buy it last week. That's the weird thing. It bottomed before the market. So it was certainly a good indicator of what happened between yesterday and today, but it was a little bit hard to to kind of reconcile how it was. And the reason why it bottomed last week was because it bottomed when the TVIX hit 1,000. This thing hit the bottom, so it was going up. It wasn't going up at the same rate that the TVIX was going down, but it was nevertheless going up. So that's a very valuable kind of a thing to keep in mind, because if we do have a relapse going into Friday, we got to look for the turning point on the VIXs as a clue to when the market will turn. And given the way they smashed this thing down the first time, they're probably going to do an even better job, next week or the end of next week, or the end of this week, if that's what happens. So that's what I'd be looking out for.
Our long alert last night on gold was 1580. So we triggered it, and then we pulled back, tested again, important prices, important areas, and from there the thing took off, and it ran up $110.
Good for you. That was a great trade. Congrats.
That's a $10,000 per contract move.
Yeah, no, that's congratulations. That might be a record for you.
There's been some tremendous moves here over the last few days. I mean, the last couple of weeks. It's just the volatility makes it. You You can have the right idea, the proper narrative. You can be on the right side of the street, all those things. And then the volatility, for those who understand that, no matter how volatile a market is, you've got to have a hard stop in place, you can still get knocked out.
Yeah, for sure. So, listen, thanks very much for the invite.
You bet, John.
And have a great afternoon, and
You too.
stay safe.
All right,
Bye-bye.
talk to you soon. All right, if you didn't grab a screenshot of the Concierge Trade Alerts, here they are again. And there is gold. These went out at 7:10 p.m. Eastern last night, hour and 10 minutes after the Globex open. And so, price triggered 1580. And just the initial 30-minute candle, we made it up to $15.99. It's a $19 move at $100 a point. It's $1,900 per contract traded. Right there. 30 minutes. And then, as I said, important prices, important areas, almost always tested. So price, it goes a little bit higher, and it comes back, and it gets just below the trigger, touches the BBC. Remember, price always reverts to the mean, and in our case, the mean is the BBC. So we get this big, beautiful $10,000 per contract leg, pulls back to the BBC, holds more often than it doesn't, and if you recognize this overhead, red and falling, as potential trouble, okay, that's fine. From the open of this candle at 1642 up to red and falling, you got almost $20 of room to run. You got $1,500 per contract traded, somewhere between $1,500 and $2,000. So that's the story on gold. On the S&P, last night's alert. Now these are just the concierge. I'll go over the Logic 247 as well here in a moment. On the S&P, the alert was to be long 2305, which is right here. Now, this is a very good example of what I just said about you can be on the right side of the street, you can have the right narrative, you've done everything you could do, the best you could possibly do, and still not have a profitable trade, simply because of the volatility. And let me show you exactly what I mean by 2305. Okay. So, did we trigger 2305? Yes. Did we put in a swing high at 2318? Yes. That's 13 S&P points at $50 a point. $650 per contract traded. Now look what price does. Price then pulls back to the BBC. No surprise, it always does. It also pulls back to a weekly trading zone from last week. No surprise, that's just how markets work. So then we catch another leg up, right? We run into blue and climbing, which in this scenario is bullish. But it's an inflection point in the market, and you can see that it sent it right back down to the BBC support, which sends it back up looking for resistance. So we put in a swing high here at 23.28.5. So that's 23 points at $50 a point. So that's over $1,000 per contract traded. So this was 600 bucks. This was over 1,000. Price comes back to the trigger needed 2 more ticks to get below the trigger. The swing low was 23.05 and a quarter. So 2 more ticks would have put it below the trigger. Like this, swing low here was 2300. But you see, again, we're pulling back to the BBC each time. So here's the question. When you've pulled away from the BBC, do you want to buy here? Or do you want to buy here? The answer is always going to be here. Do you want to buy up here? No. Price is pulling back to the BBC. Once price gets back to the BBC, one of 2 things is going to happen. It's going to hold or it's not. So when price gets to the BBC and starts to move higher, okay, that's your entry. Not up here, not up here, not up here, but here. And you might say, well, that's easy to say in hindsight. No, I'm saying this in foresight, okay? Last night we had some good discussions. I'll go through some of the discussion in the Telegram channel last night. Okay? So, no desire to buy this market right now. If you're a counter trend trader, you might consider shorting it back to the BBC. I'll leave that up to you. Let's go to the Dow. Last night's alert on the Dow, consider being long at 190.90. $190.90. Okay. Here's another example. Okay. Bullish cross. By the time we got to the trigger, look how far we'd already pulled away. So we trigger, we run up to, I mean, that's a 200-point move. That's $1,000 per contract right there. And nothing wrong with that. But then what does price do? Pulls back to the BBC. Triggers again. Okay. Now on this pullback, price wasn't quite able to pull back that far because why? Because the BBC served as good support and sent it higher. So all told, from 190.90 up to Alexa, 20,317 minus 19,090.
20,317 minus 19,090 is 1,227.
Alexa, 1,227 times 5.
1,227 times 5 is 6,135.
So that's what the market did. The market moved $6,135 per contract. Okay. Now, every CFRN trader got the alert at the same time. You either entered long or you didn't. You trailed it or you didn't. Trailing, just simply trailing behind the BBC, that's a lot of risk given the current volatility and the incredible range that we have on just a 30-minute candle. 30-minute candles today are, as we explained yesterday and last week, 30-minute candles are producing the same high to low range that we would typically see on a daily candle. So $6,135 per contract move. So there's the S&P. I don't know if we ever calculated this one. Alexa, 2,420 minus 2,305. Alexa, 2,420 minus 2,305.
2,420 minus 2,305 is 115.
115 points available. Alexa, 115 times 50. Alexa, 115 times 50.
115 times 50 is 5,750.
So $5,700 per contract move. On the Russell, the alert was to be long 1304. 1304. I'm sorry, 1034. So there we go. And you notice we have several triggers. From 1034 we ran up to 1087. So it's about a $2,500 per contract move. On the NQ, the alert was to consider being long 7162, which is 7162. $71.62. So we trigger, and we trigger, and we trigger, and then we pull back to the VBC. You know, this re-trigger here. So of all these entries, okay, each one of them produced today's wages. This one, you're pulling back, you're touching the BBC, and then triggering the alert. That's about as good as it gets. Okay. Alexa, 7,520 minus 7,162.
7,520 minus 7,162 is 358.
Alexa, 358 times 20.
358 times 20 is 7,160.
That's what the market made available per contract. $7,160. Pull back to the BBC, pull back to the BBC, and what are we doing? Once again, pulling back. Now, so far this week on Logic 247, we've had 10 alerts, 8 actionable. Nothing's stopped out of yet. Again, that's an unusual week. We typically average 20% being stopped out on any given week. Here's what the actual alerts themselves look like. Now, the ones we just looked at, that was the Concierge. That's a static report that comes out every evening shortly after the Globex opened. Those numbers are good for the entire session. Logic 247, this is the around-the-clock service. You could get an alert at 2 a.m. or 2 p.m. You get an alert when opportunity develops in real time. Last week, week 85, we had 33 actionable alerts. One of them was stopped out. It's 3%. Again, that was an unusually low week. Only 3% being stopped out. We averaged 20. This past Sunday night, 2 days ago, we started out with a crude trade. Thumbs up means we got at the target. Z's means it was never triggered. And then a red X means it was stopped out. So 21.55 to 21. That's a $550 per contract move. Now, what special expertise does it take to trade this? Well, if you can sell 21.55 and get out at 21, that's the expertise it takes. However, what we do is not about you just trading these alerts. Our goal is to teach you to see this trade setup as it's happening. So I don't want you to just rush out and trade an alert because it's an alert. Our goal is to teach you to understand how markets work, teach you how to read the chart, so that you see this opportunity setting up just as I saw it set up. I've been taking a lot of time at night in the discussion group to walk through, put in lots of charts, because I'm really trying to make sure that everyone who is a CFRN passport holder understands every alert, why it's an alert. And the more times somebody shows you something, well, hopefully the better you get at recognizing it yourself. So when you first start out with us, an alert is truly an alert, but over time it becomes more of a confirmation, because chances are, if I saw it, if you've been paying attention, you saw it. So when the alert comes in, you can go, oh, you think to yourself, oh yeah, I already noticed that. I was already in the process of putting that trade on. Nice to have that, confirmation come in. First it's an alert, then as time passes, becomes more of a confirmation. Okay. Pulling back to the BBC. What's the high probability thing? Never changes. Always the same. Okay. Does that mean it's absolutely positively going to hold? Nope. That's why it's called the high probability thing, not the sure thing. So this one on the S&P never triggered. On this one, which is gold, so 1492, made it down to 1490. It's $200 per contract traded. Looks like we didn't hit 1486. There's another no trigger. Here's the S&P, 2274. This is a long buy. From 74 to 76 to 80. That's a 6-point move. The weekly trading zone overhead, 2341/42. Which we can see that was reached. That's a this week weekly trading zone. So you have, in essence, in this alert, you have 3 targets. Initial target 76, second target 2280. The next target is 341. That's another 60 points. This is a 70-point alert. At $50 a point, that's $3,500 per contract traded. This one alert with one contract pays for more than half of what a CFRN passport costs you. And the passport is good for life. Let me explain that again. This alert with one contract pays for more than half of a CFRN passport, which is good for life. That means you have access to the live training room every day for 2 hours. You have access to every one of these alerts as they're published, both Concierge and Logic. You own the indicator set for life. Everything that CFRN produces, creates, yours. For good. If you're tired of being nickeled and dimed to death by all these vendors that always have some new super indicator, some great new discovery, some whatever, bleeding you dry, there's a different way. There's a better way. One money, one payment, you're done. And you have access to unlimited one-on-one mentoring. When you need help, all you have to do is book a session. And we show up. Alex asks, what's the difference between Logic 247 and the Concierge Trade Alerts? Okay, I'm not sure when you posted that. The Concierge Trade Alerts are a static report published shortly after the Globex Open each evening. Those alerts are good for the entire session. They're based on, Concierge is based on previous price action. Logic 247, which operates around the clock, you could get an alert at 2 a.m. or 2 p.m. It's as opportunity develops. That's based on current price behavior. Okay? So Alex, hopefully that answers your question. If you have any more questions, just post them in the chat box. Here's the Dow. Here's the NQ. Okay, on the NQ, this was 7160, 7200. Now, just that part of it right there, that's $800 per contract traded. If you got in at 7160 and stayed in to 7200, that's 40 points, $20 a point, $800 per contract traded. So in the NQ, that weekly trading zone is at 73.91/92. That's the final target. Have we reached 73.91? We have. Okay. So, Alexa, 73.91 minus 71.60.
The calculation is 7,391.
Alexa, stop. Alexa, stop. Alexa, 7,391 minus 7,160.
7,391 minus 7,160 is 231.
Alexa, 231 times 20.
231 times 20 is 4,620.
Okay. Right here, this is a $4,620 per contract alert. From 71.60 to the final target at 73.91, $4,620 per contract traded. That pays for 90% of a CFRN passport, which is good for life. And this is just one alert. If you add this alert to this alert to this alert, you could probably buy yourself and a buddy a passport. Moving on, here's the Russell. Here's Crude. Now this Crude was 24.55 to 65 to 75. That part of it's $200 per contract traded. If you take a look at Crude, put it on a 30-minute. Swing high on Crude was 24.80 right here. So, from 55 to 80. What do we got? 20, 30, what do we got? 30. Well, 55 to 85 would be 30, so that's 25. It's $250 per contract traded. Here's gold, 1578 to 1590. Okay, just the first two targets. From 78 to 90, that's $1,100 per contract traded. The final target, 1638. And as you can see, we've more than reached 1638. Alexa, 1,638 minus 1,578.
1,638 minus 1,578 is 60.
Alexa, 60 times 100.
60 times 100 is 6,000.
This one alert will not only buy you a CFRN passport, you got $1,000 left over to take a little vacation. Oh, and this was just one alert, but the passport is good for life. So there you have it. That's the deal. Right now, you can become a CFRN passport holder with no money down, no payments for 6 months. Call Valerie, 949-42-EMINI, or email support@cfrn.net. This won't last forever. This special offer won't last forever. So, again, every one of these alerts that went out to every one of the CFRN passport holders last night, you could also have access to the private Telegram channel where these alerts go out. It's just a decision that you have to make. And the fact that you can make the decision without any out-of-pocket costs today, well, you have to decide what's right for you. Okay? Our methodology is simple. Our methodology is transparent. We have lots and lots of happy, successful traders, but there's no guarantee that you're going to be the next one. I can guarantee you, you won't be the next one unless you become a passport holder. If you become a passport holder, well, then you have the same opportunity as everyone else. And you have access, along with everything I mentioned, to unlimited one-on-one mentoring. Lots of places, well, a few places promise that. But according to our students and prospective students, places that promise it don't always deliver it. Yesterday we talked about being made righteous by faith. Romans 4:5. Their faith is credited as righteousness. There is only two ways you can become righteous. The first is through trying, and the second is through trusting. When you try to earn God's approval by your performance, you can never rest because you can never really be sure that you've done enough to please Him. But when you place your trust in Christ's finished work on the cross, the Bible says that you enter into God's rest. That's Hebrews 4:3. In 2 Corinthians 5:21, Paul writes, "If anyone is in Christ, the new creation, which is something that didn't exist before, has come. The old appetites and actions have gone. The new is here. 2 Corinthians 5:17. You don't have to struggle to be seen as righteous in God's eyes. The moment you place your trust in Jesus, God makes you the righteousness of God in Christ. 2 Corinthians 5:21. So, great question. Why did he choose to do it that way? Because any righteousness you could achieve through good works and keeping rules falls so short of what he requires that he sees it as filthy rags. It's Isaiah 64:6. So God credited his righteousness to you. 2 Corinthians 5:18. Paul writes, David also spoke of this when he described the happiness of those who are declared righteous without working for it. Romans 4:6-8. Oh, what joy for those whose disobedience is forgiven, whose sins are put out of sight, whose record the Lord has cleared of sin. Romans 4:6. The hymnist Edward Mote wrote these words, dressed in his righteousness alone, faultless to stand before the throne. On Christ, the solid rock I stand. All other ground is sinking sand. So rejoice. That's how God sees you. Made righteous by faith. And that's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.